What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Wednesday, February 21st. Well, guys, Tesla stock here today, finishing the day down about 6 points a share, down 3.1%. Not a tremendously volatile day for Tesla. I mean, 3.1%. If this were the NASDAQ, it would be, many people would be crying wolf, but 3.1 is not all that big of a deal here on Tesla, especially considering this late day recovery from the bottom today to the close. We regained about 2.4%, which is, never a bad thing to see on a moderate to larger size red day. At least what was that right before that later second half of the day recovery. So let's take a look here at Tesla. Starting with the 1 minute chart. First of all, listen, if you guys get value out of these videos, you like me covering Tesla, first of all, let me know in the comment section that you'd like me to continue covering this name every day. I'm happy to do it if there is interest out there. And recently, over the weekend, we blew away. I had a goal of 1,000 subs by market open today, Tuesday. We hit that with some to spare. So we have to set a new goal. My new goal, I'm going to say 2K by market open on Monday, and I think we can do that with your help. So please subscribe. I'll continue to upload and hopefully provide value. So starting here on the 1 minute chart, what we need to start with just briefly, you guys know I'm a scalper and intraday trader at heart. It's what I do every day. So just briefly have to look at the 1 minute chart, take a look at some intraday opportunity that we could look to potentially replicate tomorrow for revenue generating, even if it's just around a core position, right? A very common way to trade. So intraday here on Tesla. No, I would not say Tesla was particularly in play as far as, massive scalping edge is concerned. That's nothing against Tesla. It's just the way 99% of stocks are every single day. But as far as intraday trading is concerned here, two things. First of all, I did alert a scalp on Tesla today, but it wasn't a scalp that requires the stock to be in play. It was one of my backbone setups, one of the few that doesn't require the stock itself to actually be in play. And it's a setup I developed for just my own personal use. I call it a repeat offender. We see here, I think it's, if we look here and then we actually zoom in right in this general region, you can see here that we had a sloppy, we had this bounce off the open, can't really count that. We had this sloppy and then cleanup with this wick down, and then this bounce here, okay? And then you continue on throughout the day. And I couldn't quite alert it yet. By the time I actually got to it, it was right around this region, okay? This region here. And you can see because we had this kind of like mushy bounce and then this hard bounce and ripped high away, right? And it dragged that 20 EMA with it, which widens out that channel massively as this -2 standard deviation band continues downside and requires each additional test to be the intraday low. Okay, for me, I call that a repeat offender. It's not necessarily a perfect traditional like one I would use to teach the setup to make you understand the concept, but it's one nonetheless. And this trade has edge, and if you see a downside test of that, that's why I alerted the setup so that we can actually look at it in real time rather than it always being, a minute late and $1 short. So that's what I was looking at on Tesla as far as a scalp is concerned. By the way, if you guys want to get those alerts, take a look at that first link in the pinned comment and you get grandfathered in at the current rate so that when the price continues to go up over time, it won't be raised on you as long as you retain your membership. But one more thing I want to talk about intraday here today on Tesla. You'll see here that at one point, just roughly, the stock was down 5.4%. So intraday, I talked about a similar thing in today's NVIDIA video. A lot of traders make a lot of money taking reversals, returns to the mean on stocks that are pushing their average true range on days where there aren't really justifiable catalysts, right? Because a fundamental change, a news catalyst can change everything. But when a stock is pushing its ATR, Tesla being down 5.4%, for example, what a lot of traders will do is they'll take size, increasing the size as they take trades lower and lower, and they'll just set tight stops. So someone might take a trade here in the 192 region with a tight stop looking for this curl. Maybe they get stopped out. Fine. They take it with additional size down here in this 190 region. Okay, let's say they take it actually down here at this 189.50 region with a relatively tight stop intraday. Okay, with bigger size as it pushes lower and lower on this aggressive leg lower, and the trade becomes fundamentally a better bet, so to speak, on a return to equilibrium with no fundamental change. Right? You're basically betting against the emotions of the market. Okay, and that becomes a better trade, again, assuming no fundamental change, no news catalyst, that becomes a better trade the lower and lower it goes. And then they catch this move back higher, right? It's an intraday mentality, a longer hold, right? You're basically trying to, I don't want to say catch the bottom, right? But you're taking bigger size the lower it goes with tight stops. So even if you took 4 in a row that are losers, the idea is that when you catch it on that 5th leg down, you catch enough on the win so that even though your win rate was 1 out of 5, 20% accuracy, there's still edge, positive expected value over 1,000 of those trades because you took home so much more than you were losing because you had tight stops, right? With each additional aggressive leg, it becomes a better trade. And we size our quote-unquote bets to reflect that. Really, I love intraday trading. I mean, it's what I do every day. I don't think I'd want to be doing any other style of trading, at least primarily. But listen, that's enough intraday talk. Let's move on now to the 5-minute and start looking at this from a contextual view, from a day-to-day perspective as we head toward tomorrow, which is Wednesday. The reason I like to look at the 5-minute chart here is to look to see, was there any really obvious shifts in volume that correlated with a big stock price move that leads me to believe that, like, okay, for example, if we saw huge volume in the last hour and a half on this upside move, much bigger than the volume over here, for example, that would tell us that contextually what we would normally expect that time of day, that a huge sample size of the market, for whatever reason, agrees with that upside move when compared to an equal downside move based on the volume. And if we look at the volume here, you know, what's really interesting is the only thing that I can really pull out of this at all is you see this downside move, this kind of capitulation move downside a lot would say, which is, by the way, probably as you get lower and lower becomes a better and better entry, probably the best entry intraday in this region for a curl back upside, again with tight stops, right? You see a slight increase in volume, but honestly, nothing so much more than I would just, it's almost less than I would expect, so I should say, compared to a downside move of that nature. Okay, so I'm looking at this 5-minute, and there's just, you know, there's not a lot that I can pull out of there and say definitively, yes, this makes a lot of sense to consider this here. Which, you know, some days we get something really obvious and other days we don't, so we always have to keep an eye on it. So, the 30-minute chart here. These are the levels that I'm watching very closely heading into tomorrow. And remember, we're always looking at multiple time frames, but we're looking at the most obvious levels, the most heavily watched, self-fulfilling prophecy technical indicators. So here on the 30-minute, I got the 200 period moving average and the 50 period moving average. We're currently between both. We're not far from the 200 period. So if I'm a bull looking at this chart, I want to see the 200 period hold as a support upon a test. But really, ideally, my number one priority is to reclaim the 50 period like we had done and hold that as support like we had last Friday. All right. And if I'm a bear, ideally, I'd want that 50 period continuing downside as aggressively as possible and breaking downside the stock, breaking downside back beneath that 200 period specifically here on the 30-minute. Let's move on now to the 4-hour chart. You can see that this one's incredibly in play as we speak. We are currently right around that 50 period. Okay. Listen, if I'm a bull, this one's really, really easy. It's right at 190.50. If I'm a bull, ideally I'd want to see a pull away from there back up toward $200 a share. But if we see a retest of the 50 period here on the 4-hour chart, gonna want to see that hold as support as we saw it do so today. Okay. And if I'm a bear, you want another run at that so that we can break downside beneath the 50 period here on the 4-hour chart. Now, the most important chart of all is always going to be the daily. This has the most eyeballs by far, and you can see here that the story, at least as far as the moving averages, isn't so relevant. So we're left asking, well, what is the most obvious story here? Okay. And the obvious story here is two things. $190 a share and $200 a share. If I'm a bull, I have two things on my mind. Any test of 190, hold hard as support. Do not give up 190. And if I'm also a bull, my other thing that I'm thinking of is really here in the short term, my ultimate goal as a bull is to reclaim $200 a share here now that we gave that up. Okay? So it's really simple here. Now, if I'm a bear, it's even easier. $200 a share is the enemy. Don't allow a reclaim of 2. And really the goal here is to just get back down beneath 190 a share. At least in the short term, that could open up at least what bears are going to be thinking, a downside test of that 177.50 to 180 range that we were talking about so much a couple of weeks ago. Now, let's move on here to the options bias here in the chain. So we have 1.8 million total contracts traded here today. Big sample size. Okay, a lot of data to pull out of here. 1.156 million of those were calls and 669,000 were puts. That's a pretty heavy bullish bias here to the call side on Tesla today overall. Now the short-term speculators, the 0 to 20 delta range, 483,000 calls, 267,000 puts. So not only are we seeing an overall call bias on the call put ratio, but we're also seeing a short-term speculator call bias in those short-term 0 to 20, what is on average short-term, in the 0 to 20 delta range. Okay, and we go down here, and 4 out of the 5 delta ranges, I mean, when you get deep in the money, the volume is much lower, so take that with a grain of salt, but deep in the money, we're actually seeing a put side bias. But in the money, at the money, out of the money, and far out of the money, all 4 of those, we are seeing a call side bias here in Tesla today. If you got value out of that video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.